why do traders get paid so much? If they are making money and they're getting paid so much, there has to be something very lucrative about this business.
What exactly do you mean when you say automated trading?
So here I'm not using AI. If the Super 10 on Nifty is green, I would, let's say, buy a call. And if it becomes red, I would exit my trade and I will buy a put.
Let's say there is someone who's a third year student and they have very little understanding of finance, but they want to get into this field.
Most of the time what I've seen is new traders coming in, they think of that, whether I'm going to make profit or not. But unfortunately, that's not in my control. The higher the risk that you take, the higher the potential reward. It's a finance 101.
And so for people who have had a bad experience in the market, or their parents have, someone in very close family, what do you have to tell to them?
That
So welcome everyone to yet another episode of the Execution Show. Today we have with us our guest, Mr. Aseem Singhal. Sir has been a full-time trader, all focused on automatic trading or automated trading for last 8 years. In that, he has built systems that do not require human intervention and that execute trades on their own. And today we'll talk with him, as we have on every Execution Show, a topic: how do you start your trading journey? That would be our focus steps, and we'll talk step by step. How do you go about that? So sir has taught about 5,000 students so far and more. So welcome sir, welcome to this show. We're absolutely excited to have you and looking forward to what we'll be talking today.
Thank you, Anurag. Thank you for having me on the show.
So first question, and how did you get started in trading? What got you into trading, and what got you excited about this field?
So I'm talking about a decade back.
Oh.
Right after my graduation in 2009, I actually joined Deutsche Bank.
Yeah.
This is in Singapore. So not even decade, this is almost 15 years back now. And to tell you the truth, I joined Deutsche Bank because they were paying the most. And
yeah, good thing to optimize.
And as a fresh graduate, money is the first priority, right? Yeah. So, but that taught me a lot of things. Yeah. So I was in fact in the investment banking division. At that point of time, I was not a trader.
Okay.
But I was actually facilitating all the traders. So I was in the mid office where I would actually talk to the tech team and see what are the requirements of the traders and try to bridge that gap.
And that was for Deutsche Bank.
This is a Deutsche Bank in Singapore, and I was working there for almost 3 years. So that really got me thinking. So my thinking was always, why do traders get paid so much? Right? Because, and this is good old 2009, 2010, right after the 2008 crisis.
Yeah.
So even at that point of time, the traders used to get the maximum amount of money. So I had a very simple thought process that if they are making money and they're getting paid so much, there has to be something very lucrative about this business.
Yeah.
So that was the initial push, and then I started going into trading, and that's how it's all started.
So all back to Deutsche Bank, where so I see two hats that you wore there. One is the trading side of things, and second is the technology side of things.
That's right.
And that's where the automated trading. So our trading got you excited. Now, what did you do about it? Like, how did you get started? What was your journey? Because by education, you have not, and I don't think there is an education for a trader. So how did you get started in it?
So I come from a business background.
Yeah.
And I always think trading as more like a business.
Yeah.
So you wouldn't believe, I actually spent almost a year, and this is in 2013, 2014, where there were not too many avenues where you can learn trading, right?
Okay.
So I actually used to go to one of the traders' house, and I went there for almost 6 months. So Mr. Arun, he was my mentor, and I used to go there right in the morning before 9 o'clock. And I was just sitting there for the entire day. I wouldn't do anything. 6 months I would go there. I will just notice how he's trading.
Yeah.
He was an options trader.
Okay.
And to tell you the truth, I started trading in options.
Oh.
A lot of time people trade equities,
Yeah.
then they will move to futures, then they will go to option buying, and finally they will go to option writing.
Yeah.
My first trade was always an option writing trade.
Okay.
So that is how it started. But I would say I spent a lot of time before I put my money. So I'm a very risk averse trader. I want to ensure whatever I'm putting my money in, that is a high probability of getting my money back. So I spent a lot of time on backtesting, and that is what, in fact, if you look at my book, right, that is what I've focused there also.
Yeah.
That before you put your money in, test it out.
Yeah.
Because there is no, you're not spending anything in testing.
Yeah.
Test it out and then go ahead and actually put money. So that is how it all started.
Got it. So you're saying you started as an options trader, and first bit of it was just interning under someone, just any focus areas on how did you start your education side of things? Was it just the time that you spent with Mr. Arun?
No. So I actually went ahead, and as I said, it took me almost 2 years to actually start the trading part. So first 6 months it was all education. So I would read a lot of books. Some of the very common books like Nathan Berg, Option Volatility. So I would read. So I like reading a lot. So I would read a lot of books. That was my first 6 months. Then I would just observe the markets. There are a lot of, as you know, there are hundreds and hundreds of indicators out there. Now, some of them would work, some of them would not work. And there are specific conditions when that would work. So you have to spend time on the charts just to get an idea of what is happening in the markets. And then, as I said, I was under Mr. Arun to get the practical aspects, because a book will give you more of a theoretical aspect. But a lot of things which we actually see in the market are not written in the books. So 1 year was only education, no trades. No trades at all.
For 1 full year.
1 full year. No trades at all. And in fact, when I first started my trading, I still remember I had a very small account of 30,000 rupees.
Okay.
And I didn't even know that for option writing, we need more amount. So I was trying to put my first trade, and my trade was getting rejected. I'm like, I called my broker. There's some problem in your broker. I have 30,000, but I cannot take the trade. So that is how it all started.
Yeah. Perfect. So, but this is quite astonishing. 1 full year without trading, because a lot of now what we see is trading and then going back to some sort of learning, and that too forced by the market. But so we've been using few technical terms all throughout. So let's just, for our audience, build some. Let's answer them very quickly, one by one. What exactly do you mean when you say automated trading?
So when I use the word automatic, like you do it in any normal word sense, right? Automation means that whatever you have in your brain, you try to code it so that the computer will take the trade on your behalf.
Okay.
Now it has to be a very mathematical sort of a thing, because you cannot really code something which does not have all the steps. So if your strategy, for example, you have a very basic strategy of, let's say, super trend.
Okay.
Where you are saying, if the super trend on Nifty is green, I would, let's say, buy a call. And if it becomes red, I would exit my trade and I will buy a put. Now this is a complete strategy. Right? You have created a rule. Now if you can write a strategy in these steps, all we can do is put this rules or these steps in a code.
Got it.
So when I put it in a code, the code will keep running on its own.
Got it.
And I have enough time to do my other businesses.
So what you're essentially saying is automated trading is where you can put things in the code, where you can fix rules as if you're giving instructions to someone. If this happens, do this. If this happens, do this. And then if the trade is the execution is automatic.
Correct.
The plan is coded by you, and the execution of it is automatic.
Exactly. So here I'm not using AI. When we start, because now in the chat GPT area, like, we can actually don't even have to give all the rules. The AI would figure out what is the best rule. So whatever testing, again, whatever back testing I've done, I've not actually got an excellent strategy that would still work in the Indian markets. So, but again, this is the second step.
Got it.
That you're not even writing all the rules. The AI is figuring out the rules automatically and then executing it also.
Wow.
So that's the second step.
So that's how AI impacts automatic or algorithmic investing, where you don't have to define every rule. AI can figure out based on chart patterns, based on whatever the parameters that are described, and accordingly they can build rules that can be executed.
Yes.
So basically the role of humans is reduced.
Correct.
So that's one more application why AI will impact or does impact this field. Next, sir, we use the word backtesting.
Yeah.
So for our audience, if you can explain what exactly is backtesting.
So like I said, let's take the same example where we're talking about the super trend strategy. So we have created the rules, but we still are not sure whether this particular rule has worked in the past. So firstly, when we have that rule, because it's a rule, I can go on historical data and test it out, whether historically has it worked or not. Has it given me profits or has it given me losses?
Perfect.
Now, if it has given losses, right? If it has given losses, then obviously I will not be taking that strategy forward because historically itself it has not worked well. But a lot of times what people misunderstand is that if it has given profits, it will obviously give profits in the future, which is not the case. Whenever we even talk about mutual funds, right? They always write that line. Historical returns are, and they will speak it very fast. But basically what they're saying is that historical returns have no guarantee in the future. So the idea of backtesting is to actually eliminate a strategy.
Okay.
So let's say I have 5 strategies, out of which 3 have given a negative result or not a great result in backtesting. Those are eliminated.
Got it.
But the last 2, which have given me a positive result, does not have a guarantee, but it gives me an opportunity. So I can use my other techniques like risk management, money management to ensure that I have a higher probability of winning.
Got it. So essentially what you're saying is backtesting is looking back and seeing if something has worked in the past. If something has not worked in the past, we do not do that even going forward. But if it has, then we use other tricks and other methods to see if it works in the future. Perfect. So that's, and what role does backtesting have in a trader's life or someone who's working around? And I'm talking from a very beginner's perspective. I'm not talking from someone who's sophisticated.
Correct. So a lot of times there is this, I think people feel that backtesting can only be done using a code or you need sophisticated software or tools to do it, but it's not necessary. Because you can actually do a backtesting on any idea that you have. Let's take a very, very basic idea that you think if the market is going up and there's a doji formation, the market will come down. So you have an idea, right? You have steps. So there are 3 steps. First step is market has to go up. So you will have to define what you mean by going up. Let's say you are saying I need maybe 5 candles which are having a higher high, or let's say out of those 5 candles, 3 have to be green candles. So you have defined what is going up. Second definition we need is what is a doji. Because having a perfect doji is very hard. So maybe you will define it as a not like a doji or maybe like a spinning top. So that is step number 2. And step 3 is once we have taken the entry, what is going to be our stop loss, what is going to be our target. So first step is obviously define what is your strategy. This is easy and this does not require rocket science because this is your strategy. Then you can actually, so I'm assuming all our listeners here are very much full-time traders and actually wanting to grow, wanting to grow in this field.
Not all are full-time traders. Many would be aspiring to be traders. They have just started. They have learned a few things. So where let's say they would be aware of what candles are, what doji is, what super trend is. But how to use them is their next challenge.
Sure, but I am pretty sure that they are the ones who are wanting to pursue this as a second career, right? So why I'm saying that is because you need to spend time with the markets. So once you've created your strategy, you can actually go ahead and test it out on a normal Excel, right? So I would always do that. I will have the date. Let's say I'm testing it for last 6 months. So at what point I took the trade, what was my entry price, what was my initial stop loss, what was my initial target, if I have a trailing. So I will put all those trades in the last 6 months.
Got it.
And probably it will take me about 15 days because I'm testing for 6 months. And then I will review it. Has it given me profits? Has it given me losses? Once you have 6 months of data, so maybe you have about 100 trades, you get a lot of good insights. That maybe what you were thinking as 5 candles and then a doji, you feel no, I'm missing out a lot of trades. Let's probably try 4 and a doji. So that will give you and then you will actually start thinking of other strategies also. So right now you were thinking of a doji. Maybe by looking at so many charts, you have an idea, or maybe the Marubozu is working, maybe the engulfing candles are working. So that is how one strategy will lead you to the other. So like I said, I have not used any sophisticated coding or any tools. It's normal Excel and the charts, which has given me a lot of confidence. Firstly, on the initial strategy that I had. Second, I am able to build on new strategies.
Yeah. So I think you've put up a very interesting point where backtesting, a lot of people have this impression it's all sophisticated tables and charts and all those, but you can manually spend time, and what that does is two things. One is obviously it tests your strategy, it takes time. Also it allows you to spend time with the market. I think I love the word that you use, spend time with the market, because I think that's the only way one can get familiar with the movements and like nitty-gritties of the market. So I'll take this. We also used the word risk management. We'll come to that because that's a big topic. That's and lot of first-time traders. What happens is they're driven by energy, and they miss this topic because there's so much energy and so much willingness to act. That risk management, which forces you to not act, that kind of goes for takes it a hard time coming to surface. But anyways, let's say now, so lot of places, for context, lot of places we've been using technical indicators, words that are super trends, and it's okay if you don't know all of them. We'll obviously learn as we go ahead. Let's say there is someone who, let's take 2 or 3 examples. Number one, let's say there is someone who's a third year student and they have very little understanding of finance, but they want to get into this field. And then second, let's say there is a business owner who also does not, let's say 30 years, business is now settled, doing okay. And then let's say someone who is who's into software and has some time on the side. So these are 3 different sorts of people, all in different realities, different age groups. Now all of them have one thing in common. Let's say they want to start their trading journey. Step by step, what will you ask them? What should they be doing?
So I can see one thing which is common in all these 3 sets of people is that they are not coming into trading as a full-time career.
Yeah, not right now.
Student, obviously he is
Primary
going to
focus is exams.
On the exam, and on the 4th year, the gentleman who's 30, who has 30 plus years of experience, has a business to take care of, and the software engineer obviously is working some job, right? So first thing, whenever you're coming into the markets, is you should understand what kind of a trader you want to become, right? Sure. If you want to become an intraday trader, where you are actually looking at the movements which are very quick, you obviously have to be in front of the system for 6 hours.
Yeah. So for context, intraday trader would be someone who's buying and selling in the same day.
In the same day.
So if you're buying today, you're selling it also today. You're
exactly.
not having anything tomorrow.
Correct. So I would rule out that intraday trading for all the 3 people that we just spoke about. So they would either go for something called scalping. So scalping basically means, let's say you have about 1 hour in the middle when you have a lunch break, right? That is when you look at the charts and you try to capture those very quick moves, right? So that's called scalping, where we are entering in, we have a good move, we come out
within that hour.
Within not even that hour, we will come out within 2 to 3 minutes, and maybe we'll take only 4 to 5 trades when we are actually getting those trades, right? So that is scalping, where we are actually going in and coming out very quickly.
5 minutes.
This would again gel well with all the 3 use cases that we have spoken. Or they can actually go for something called swing trading or positional trading, where I'm taking the entry today, and then maybe I will exit after 2 to 3 days.
Got it.
So that's the first step, that you figure out how much time you have, because that is how you will figure out what kind of trading you're going to do.
Yeah.
Second thing is, you should understand what is the kind of risk that you're going to take. So we spoke about risk management a little bit. So I'm going to talk about what is risk. Risk, firstly, is not a bad thing.
Yeah.
A lot of times, because it sounds bad, risk is not a bad thing. Because if you're taking risk, and why do you want to take the risk? Because you can get a potential reward.
Yeah.
So it's a finance 101. The higher the risk that you take, the higher the potential reward. Now, maybe you can be very risk taking. That means you want, yes, I'm a risk taker, I want to go for high risk, high rewards. Someone might be a very low risk taker, who's saying, no, I'm very happy with my low risk, low reward, I don't want to lose much. So you should first understand what is your risk appetite. How much money you're willing to lose.
Okay. Yeah.
Don't think from an angle, this amount of money I'm going to make from the markets. It should be the other way around. Your psychology should be, how much can I give to the market?
Okay.
Because that is the only thing which is in your control, right? So I have a very good anecdote. So I was listening to one of the interviews. One interviewer was doing an interview with Mr. Dhoni, and the interviewer asked, "Sir Dhoni, you are the captain cool. How are you so cool in any tense situation?" And his answer was that I only take care of the things that I can take control of.
Yeah.
I don't think of whether I'm going to win the match because that's not in my control. All I can control is I can practice, I can make my team practice, we stick to our rules, we can learn about the opposition, we can learn about the pitch, all those things. But then I don't think about what is going to happen, whether I'm going to win or not.
Yeah.
Same thing with trading also. You can be as good a trader, but you can never guarantee whether I have this trade is going to be a profitable trade or a loss-making trade.
Yeah.
Most of the time what I've seen is new traders coming in, they think of that, whether I'm going to make profit or not. But unfortunately, that's not in my control.
Yeah.
What is in my control is the actual risk management. How much money I can lose, that is based on me, right? What is the kind of strategy I can run? So focus on the things that you can control, the controllables, not on the non-controllables. So I would say think from that angle, second. And then third, you can either be a generalist or a very specialist. When I use the word generalist, that means you trade anything that is there, comes, right? So there are 5,000 odd stocks in NSE and BSE combined, right? So obviously, if you look at so many charts, you will get some trading opportunities. Those are the generalists. On the other hand, you can also be a specialist where you're saying, no, I am only going to look at, let's say, Nifty, Bank Nifty, which are our indices. And once you look at them for, let's say, 3 months, you will exactly know what is going to happen because you've actually lived through their journey, right? So you will know what is happening with them.
You get a pulse of it.
Yes. So it's a complete process. But the idea is spend time, like I said, because as you said, a lot of times people want to just jump into trading.
That's what happens actually.
Yes, but respect it because in whatever field you are, right? If you are an entrepreneur, if you are a lawyer, if you are a software engineer, you have spent 3, 4, 10 years in education before you actually start earning money. It's the same thing in trading also. You probably don't have to spend 10 years, but at least spend 6 months before jumping in.
So because the trading is not very formal, and that is where I think people skip a lot of steps or miss a lot of steps. So basically what steps you're saying is, first thing first, I need to figure out what kind of trader am I, intraday, swing and scalping. Second thing that you said was, how much am I willing to lose?
Yes.
How much what's my risk appetite?
Yes.
Third thing that you're saying is, I do need to invest in my training.
Correct.
If I'm not, I should not jump day one. I should not directly jump. What next? Like, let's say,
correct.
I'm going through these phases. Now, and obviously we touched upon back testing and all, which forms a part of training or learning. Next what? Next,
so I'll just give you a little more details on the training part now.
Sure.
So there are different ways of trading markets. First, and which is the most easiest, I would say, is using something called indicators.
Sure.
So when we use about indicators, which I have also mentioned in my book also, that indicators will actually help you. They will try to indicate to you what is the potential movement in the market. So they are trying to predict what is going to happen in the market. As I said, they are easy because they are already there, and we will do as per what they are offering us, right? So that's the first way where you actually use indicators. A lot of people start with that. Second is you ditch all the indicators and you only talk about price action.
Right.
So like we use the word bhav bhagwan che. So that means you only think about the price. So your charts are clean. You will only have the red and the green candles, and based on that you try to figure out what is happening next. So I would say that's the second level. And we are still talking about stocks here. The third is you actually think of going into options. Now, why options is a different beast altogether? Again, I think I've spoken about 10 to 12 strategies about options also in the book. Is that in a stock, it's a linear movement. So when I use the word linear, let's say a stock is trading at 100 rupees and I have bought the stock. If the stock goes up by 100 points, I will make 100 rupees. But if the stock goes down by 100 points, I will lose 100 points, right? So it's a 1:1. But option is non-linear. What that means is if I've bought an option for, let's say, 100 rupees and the underlying goes up by 100 points, I can actually make money I can lose money or it can be flat. So that is what gives it a very good flavor.
Yeah.
And that is why you would notice that India is considered one of the highest, we have the highest volumes in options trading.
Yeah.
Because you can create a lot of strategy. So that's where your thinking and your ideas will come into the picture. So I would say you have to, again, as you have to figure out on your own, what is that you like? Are you someone who's actually willing to go into options? Because options might sound very lucrative, but there is no free lunch in the market. I'll be very honest with everyone, right? So if it's too lucrative, there has to be higher risk. So you have to bear with that.
Yeah. So essentially, this is what any beginner would want in this, should go through in this. Basically, one thing that you're saying is a lot of backtesting, spending time with the markets, which is manual time better. Uske alawa training before jumping directly. So what has happened is lately, and during COVID especially, a lot of people had time at home and they jumped into trading, and a lot of them backed out also. A lot of them have stayed in the markets. A lot of them formally trained as well. So there are few things that are there which are common in people who are starting to trade. One is, what is the role that tips play in, because that's very widespread. So what's the role that tips play in any beginner's life?
So firstly, again, I'll be very pragmatic here. No one is here to make profit for you, right? We have what, 150 crore janta. So everyone is a very selfish person, and which is not wrong. Look, we have families to feed. Everyone is very selfish. So if you feel that someone is going to give you a tip so that you make profit, that's not going to happen. Correct? So what I want to basically tell you is that avoid going for those tips. I'll tell you the process that they follow. Let's say they have 64 people. So there are 64 people. I'll tell you the reason why I'm using 64, but there are 64 people. And they will send tip to 32 people saying, isko buy kar lo. Let's say Reliance ko buy kar lo. And the other 32, Reliance ko sell kar do. Okay? So 32 got Reliance ko buy kar do, 32 got Reliance ko sell kar do. Obviously, one of them would make money. Either the Reliance will go up or it will come down. One of them will make money. Let's say the guys who it went up to 32 ko buy ho gaya. Now आप मान लो 32 वाले में आपने कहा यार ये तो एकदम perfect बता रहा है. Then they will talk about the second tip. So they will split this 32 into 16 and 16, and now they will say TCS 16 को buy कर लो and this 16 को TCS sell कर दो. Let's say अगर आप again you were in the TCS 16 buying वाले में and it went up, you're like wow यार this is 2 out of 2. And what they do is 16 फिर 8 8 4 4 2 2 1 1. There has to be one person जिसका 6 का 6 tip सही होगा. There has to be there, right? One person will get all those 6 tips correct, and he's like, dude, ये तो company perfect है. इसका 100% accuracy है. This is how they trap you. But you have to understand, you're the only one who actually made money out of those 64, but there are 63 other people who have actually lost money. And when you now pay them the money to get the tips, you might be in, and there's high probability that you're in 63 now, right? So this is what actually happens, is the process that happens.
Great.
So firstly, don't go for tips. Second, it's illegal. It's illegal. So obviously more the reason you should not go for tips. Third, you're actually paying someone, right? If you actually want to pay someone, go for a research analyst, right? Someone who has actually learned trading. You don't even know who's giving you tips. So I would say those are the 3 things. But again, let's come back to the first question, that you are not going to stick with that person for the whole life, right? Rather than getting the tips, learn it yourself.
Got it.
Learn it yourself, right? So rather than giving that 10,000 to that person, spend time with the markets, learn the techniques and do it for yourself.
Great. And so for people who are who have had a bad experience in the market, or their parents have, someone in very close family, and now they are now the market is biased, they are biased against or for the market in whatever frame. What do you have to tell to them?
No, I can totally agree to that. Let's say you started with 50,000 rupees and
You lost it.
You lost it either through tips or through yourself,
Whatever,
right?
yeah.
It's hard. It's hard to restart. Firstly, don't have that baggage.
Which is very difficult.
Yes, don't have that baggage. Don't come to the markets thinking I'm going to get that 50,000 money from the markets, right? So remove that baggage. Second, as I said, start small now. Don't start with 50,000. Start small. Try to build your confidence. Maybe start with 10,000. Maybe start with 20,000, and play with proper risk appetite. Correct? Because the fact that you came in with 50,000 and you've lost the entire 50,000, there was some problem with your risk management.
Got it.
Because if you're starting with 50,000, in no way you should be losing more than 10,000. That's again the basics of stock market. Correct? So you have to take it as a learning curve, that what were the mistakes that you did. Maybe you were not following the right strategy.
Got it.
Maybe you were not doing the right money management, things like that.
Yeah, got it. Perfect. So I think, sir, we've learned quite a bit. Today we spoke about Sir's journey. We learned about what are things that one should look at when they're starting out at their journey. We learned about tips. We learned about just forgetting, or not forgetting, but coming out of past experiences that you've had in the market. Sir also has a book that is there in the market, and another book that's coming up. So if you want to talk about 51 trading strategies about the book.
Yes. So we did a collaboration with Zebralan and came up with a very nice book called 51 Trading Strategies. It has a lot of different ideas. I would say it's more of an idea. It will stimulate your brain cells. Like I said, I know that a lot of you might be equity traders, might be option traders, might be future traders, might be an intraday trader or a positional trader, right? So I've tried to come up with different ideas for you. It gives you a lot of QR codes also. So you can actually scan those QR codes, where I've actually given a commentary as well. Because a lot of times what I've noticed is just by looking at the charts, it might not be that easy to understand. So every strategy, there is a commentary as well. You can go through that. And some of the strategies I've actually done a backtesting also, especially the option ones. That will also give you an insight of how the backtesting is done. You will actually see maybe 5 years of backtested data, which will give you more confidence. So it's a very comprehensive book. Plus, it's a very beautiful book. I'm a little biased, obviously it's my book, but it's a very pretty book, because I feel that if you will not read the entire book, then there is no point investing in it. So yeah, it's a very beautiful book.
Wow. So that was it. That was for today. Thank you so much, sir, for spending time with us. We've had a lot of understanding, I would have loved to spend so much more time on this, and probably we will in our further discussions. But for now, backtest, spend time on education, have patience. It's a journey. It's not a one-day effort. It's not something that you do tomorrow morning. With that, thank you so much, sir. Thank you everyone for taking out time. I look forward to again meeting you. It's been super fun doing this, and I've learned so much about trading, and I look forward to actually reading the book line by line. I have read a lot of it, but line by line. And thank you again, sir.
Thank you.
Thank you.